Hey there, checking in on the markets. Want to jump right into it. S&P 500 futures. What we had was overnight a trade down to November's point of control. We're looking at an hourly chart here, monthly profile. So this profile is November, and this profile currently working is December. So I want to use November's profile to trade December. What happens most recently is price traded down to November's point of control, the bottom of this high volume area. That's where you want to look for opportunity. If I just draw a box, you can see buying in this box was a pretty good trade. Buying closer to the point of control at 1760 was an even better trade as far as risk reward goes, and you're getting paid off for that. Now we have traded back up towards December's point of control, which I don't put too much emphasis on because the month's not over, but we do have a high volume area here that I'll mark off. And we're having, we traded into it just briefly, but we've backed off since today. So the trade was to sell at the bottom of this high volume area, be a buyer at November's point of control, and sell at the bottom of this high volume area, monthly point of control. That's where you would look to take some profits. It looks good in hindsight, but you can see the setup and how it occurs. So what's going to be interesting is, can price poke above 1785 and push towards 1796 or so, the top of this high volume area, or are we going to fall back down towards 1770 and then maybe back towards 1760, 1755 and trade in this high volume area? One thing I want to point out is from November, there's not much volume where we are currently trading. So I would suspect that you're going to get an opportunity either around 1770 or maybe buy the breakout sort of thing around 1785, or I should say wait for price to clear 1785 and show support there before being aggressively long the S&Ps, even if it's for a day trade. So that's that. Let's move on to trades that are working. ExxonMobil, this was, here's a good example. The most important level on the monthlies to me is where the point of control is. So in ExxonMobil, the start of the month, we got an opportunity to buy pretty darn close to that point of control, $93-ish. 92.5 was November's point of control. I know I'm in around 93.20. I did take some profits here on this pullback, but I got right back in. So what I did was I sold half of my position when it pierced through this average true range stop, and then I wanted to get back in. I still believe that Exxon had upside. However, I just wanted to exercise some discipline. So let's focus on structure here. Obviously, Exxon's in an uptrend, but what really happened here, and I think it's important to recognize, is we have our high right here, 96.05. We didn't have a closing high. It was 95.76 back on this bar here, right to the right of this blue one. That was our last closing high on an hourly basis. But regardless, price trades down. We get to the point where we have a swing high here. We make new lows. Then we move up. We do not make a new high. We're still in a range between this high and this low. So let me zoom out so we can see that a little better. We have this swing high here, and we have this low here. When we trade to the top of this range but don't go through it, we can still assume that there's a downtrend. But what happens? We trade down, we don't make new lows, we end up actually making new highs. That's the start of a reversal. You're seeing something different. Price doesn't really pull back, we move higher. But what really happens is price moves higher, makes a new high. But what happens is price actually fails from that level, trades down, back to where? The top. Remember the top of this range where the trend kind of shifted to the upside again? Well, guess what? Price pulls back to those levels, and we end up making new highs today. A really nice pop today. So you can assume that more of the same. If we get a pullback, it's okay. $96 is all right for a pullback. As long as it really doesn't breach this low here that was created the other day, last Wednesday or Thursday, I think we're okay. And I think ExxonMobil can hit that $100 price target that we have right here, right now. Now, if you're uncomfortable with this, you have a 93, say you're long from 93.5 when we first started covering this. In a week, you have a 5% gain. So I would take advantage of that. There's nothing wrong with that, and booking some profits. But you can see how it's set up. Remember, this monthly high volume area in November provided for great opportunity, and we saw higher prices in December. That's what we want to be a part of. Deer, a similar situation where you can see you want to be involved, and I don't even mean be a buyer. You just want to be involved as close to the prior month's point of control as you can. And you can see deer had a nice pullback towards that level. There's too much demand. Then we had an absolutely huge up bar. Look at the amount of volume on these two bars. And what has happened since? Deer has continued to run higher. Our price target on deer is between 88.5 and 89.5. You can see here it's the top of this high volume area, which was resistance a few days ago. Now we're going above it. I would still look to trim into this strength. There's no reason not to. However, again, using the same mindset that one, that point of control, that high volume area where the point of control lies, that's where you want to be involved. So consider this on a 1-year chart, which is what we're looking at with deer right now. We have a lot of, there's a lot of juice in deer that could propel this thing back up towards 95.60 where the 52-week highs are, because there's so much buildup here. There's so much emotion, a lot of volume here. And now we're seeing explosion to the upside. There's no coincidence that this is a nice explosion to the upside where you're seeing 1%, 2%, 3% gains on deer on any given day. That's just kind of what happens. And that's why I suspect that 89.5 to 90.75 or so is a realistic target to take half off. But I don't want you to be greedy. I do want you to realize that I think deer has more to run to the upside, but respect it. The important thing is to make money, and that sometimes means locking in profits. However, you also want to let winners run. Similarly, Caterpillar, again, where do you want to be involved? Right in this big high volume area here where it's right to be a buyer. You can see any opportunity below 83 or so, the bottom of that high volume area, was an absolute killer opportunity. What happens? We trade through it. Now, okay, notice on the 4th of December, we traded down to the bottom of the range, the bottom of the high volume area, acted as support, pushed to new highs. We pull back. We're support, the top of the high volume area where we continue to push higher off of now. This is just what stocks do. This is how you can use volume to really enhance your trading in the market. So I just want to kind of point that out. JP Morgan, I'm going to go back down to the hourly. Okay, this is a little bit of a different trade. The point of control in JP Morgan is 52 for November. We have had a really nice move off of it. If we got a pullback back towards 52 in JP Morgan, that's basically saying that this is all rejection. All of this move to the upside was just a fake out. It was an opportunity to sell. But remember, the bigger the time frame and where that point of control is, the more potential juice it has. So that's kind of what I see here. JP Morgan, the point of control, $52. I got long JP Morgan off of this. I want to say it was the 8th of November. I don't think it was the 1st. I want to say it was the 8th. Got long. It was actually towards the end of the day, I remember. And the thesis was this thing has to keep going. This is a breakout. This is just a triangle pattern that's breaking out to the upside off of the point of control for the year. I want to see extension. Well, we got a 52-week high. Now I want to see, okay, is price going to dip here and push higher? The point is you want to protect profits. There's nothing wrong with taking half off here and letting the other half ride. But the point is lock in your gains, whether you're using a trailing stop or not. There's no reason to take a loss on this trade anymore. So the worst case scenario should be a break even on the trade. If I zoom in a little more on this, I'm going to mark off the high volume areas, which I've already done. And you can see, okay, high volume area. See it? High volume area. Got it. If I focus in December now, okay, December starts, we trade down from one high volume area to the next, find support. Now we're just bouncing through. Now what's really happening? I'm going to focus on the rectangle here. Price, the last two swing points, we had a low here and a high here. What's happened since? Price has not touched that low or that high since, therefore we're trading sideways. This is just sideways consolidation in an uptrending stock. Whether it goes higher, I'm not sure. Whether it goes lower, again, I'm not sure. But what I do know is JP Morgan is at a level where the buyers, if this stock wants to continue higher, it should find support around 55.75 and then continue on to move to new highs. So we'll have to wait and see. If it breaks down below 55.75 and stays below there, then that's saying something. Then I think you can look down towards this next high volume area here, 54-ish. You could even look at this little ledge here, if that's what you want to call it. But basically the point is there's some downside targets, but we don't want to see that. We want to see this uptrending stock hold, realize that it's just in a consolidation pattern right now, and there's nothing more to it. All right, Apple, a little weak. And what I mean by that is every high, every bounce in Apple recently has been an opportunity to sell in. If I look at October's point of control, or that high volume area, was it right to be a buyer or seller in that zone in November? And honestly, you can make the argument it was right to be a seller, but ultimately it was right to be a buyer. Price eventually got through the top of it, traded higher, and now we're in sideways consolidation. Again, similar to JP Morgan, our major low is right here, and we aren't quite there yet. And our high, I'm going to just kind of draw a zone. And what I'm drawing a zone of is the top, the actual high, and then the closing high for the high. Let's see, the highest close on an hourly basis, which is right here, 10 o'clock on Thursday, last Thursday, or 2 Thursdays ago. Excuse me. Anyways, so we're just range bound until then. We are making some slightly lower highs and lower lows, so we want to keep an eye on that. Whether that turns or not, I don't know. Again, the point is protect profits. We were talking about Apple around $520. That's a really nice trade. It just hit its average true range trailing stop the other day, which would have gotten you out at $555, so you got a $35 gain there. Not bad. I would take half off, not the whole thing. I would keep your entire stop. Well, in my opinion, I think you can keep your stop a couple dollars below $550 and see where it goes from there. So I just kind of want to point that out. All right, Ford, I think it's interesting. I'm not sure if it's the right trade, but I want to look at it on a daily chart, actually. What I see is, again, this high volume area thing, right? We can see there's a big one that's formed. Price, it's resistance right now. Let's be honest. The last time price was in this zone, it was right to be a seller, not a buyer. We dipped below it. Now we're trying to pierce back through it. The only thing I can compare to is GM, which is having a nice move off its point of control for the year, up 3.5% today. You want to be in leaders and not laggers, but the reason why I like Ford as a potential candidate to the long side is because we have a lot of value up here, and I just want to see where it goes. I think if we can get back above 17 and hold it for a week or so, then I do think there's a run at 20 that can happen. But I'm sure there's some way on the stock because the Al Mulally thing, whether or not he's going to stay or not, who knows. But just keep an eye on it. And the last name I want to cover, IBM. This is a buying opportunity. I see it as. I'm in at lower levels, honestly. I think I was buying around 174, 175 today, which means I got a pretty decent cushion right now. But this is double bottom written all over it. It reminds me a lot of Apple a handful of months ago. And honestly, what's the trade here? I see this as a trading box. 185, 186 on the upside, and then ultimately the goal is to get this thing back above 190 and push towards that point of control for the year. If I look at it on an hourly chart, we traded down to October's point of control, where it was right to be a buyer. Now the goal is, can we get above November's point of control? If we can, okay, think about the psychology behind this. If we can get above 2 months' point of controls, so you have October's point of control and November's point of control. If we can get above both of them, all of the buyers in IBM, basically from 180, which is November's point of control, all the way down to the lows, all the buyers are winners, and all the sellers, short sellers, if there are any, are losers, and all the sellers who were just, getting out of the stock or whatever, I don't want to say they're losers also because they could have booked a profit or whatever, but they were probably wrong for selling, and you'll probably get a little boost to the upside and see a retest of these highs here, this point of control for the last 90 days, which is this profile on the right, which I just zoomed in too much. 90-day point of control 185. So that's what I want to see. And again, looking at higher highs, lower highs, lower lows, whatever. Higher highs, higher highs. Higher highs, higher lows, excuse me. What I see here is a low that was breached. So we had a continuation of the downtrend here, and then we had a big reversal. And what happened? We got above this high here. So now we have a stock that I think you want to buy on any weakness. A pullback towards this month's point of control, 175 or so, may be an opportunity. Honestly, I don't think there's a reason to shy away from it now. The big thing is we have to get above November's point of control, and you need to stop below 172. Let's see what the low was. 172.73. So really, okay, call it 172.50, 172.25. To stop somewhere in that range. How about 172.15 or 171.90, just below the absolute low here. And again, the trade is for a move back up towards 185, 186 to complete this double bottom. I just want to show you. Similarly, this is why it reminds me of Apple. Apple retested these lows just like this, and then it had a nice move to the upside. So that's kind of what I want to see. And also the point of control for Apple, it's actually a really similar trade. The point of control for Apple was the target at the time here, which was, okay, 450, whatever. Price trades through it, pulls back to it. That was your opportunity. So, if you're looking for something similar on IBM, the trade would be up towards 190, and then for it to push through it, push to 205, this big high volume area here, which is the next most important volume area above the point of control for the year, and then a pullback to 195. So let me actually draw this out. All right, so the trade would be up towards the top end of this range, ideally push to this top or this range where it holds 190, pushes to 205. Now this is just going up and away, but then the pullback to the point of control for the year, and then the continuation higher. That's kind of what you want to look for, and if that happens, I think being involved around 177 on this stock isn't a bad trade-off. So right now you're risking $5 to make about 7 or 8. Not the best risk-reward. Hopefully you're watching this for a while because I've been talking about it, and the opportunity to get in was at lower levels today. So anyways, really that's all I have to say. I hope this video helps. Take care. Have a great one. I'll talk to you next time.